All right, here we go. 7 lessons from my biggest ever cash winning week. So, last week I closed out of 2 specific positions. Now, to be absolutely clear, I run these positions on my own trading account and I also run these on my managed fund. Now, this video isn't me going through the specifics of that particular strategy, but 7 lessons that I think are really important and you will be able to apply to your own trading as well. So here you can see the 2 positions. You can see them closed out as of 4th of May last week. As I said, this is one of the personal accounts that I trade them from. I trade them on another personal account and also in my trading fund. This strategy I've been running personally since 2017. So what did I learn from it, and what can you guys take from this? So the first lesson is this: 2 trades don't make you a trader. So any trader can post up on YouTube, anywhere out there, and say, look, here's an amazing trade that I had. Here's a winner. Here's a trade that made me 10,000 pips, whatever it is. And essentially, I'm doing the same. I'm showing you 2 trades out of what are hundreds of trades that I place over a period of a year and thousands of trades over multiple years. So I think it's really important to understand that, yes, 2 trades don't make you a trader. However, if you're managing your risk correctly and you are looking for trades that have bigger risk to rewards, 2 trades can make a huge difference to your results. So to put it into perspective, over the last 2 or 3 months, I've been going through a drawdown period, but these 2 winning trades have more than made that drawdown period back and have put significant profits into my personal accounts and also onto the fund in terms of percentage return, not just the actual money. So understanding that if you are looking for those higher risk to rewards, you are going to have periods where you may have a run of losing trades, but 2 trades can put you into a good position. But the important thing is that you don't change your risk. These trades were profitable not because I risked more on them and thought I could make more simply because I was more certain about the trade, which is an illusion anyway. This was using the same risk that I use on every single one of the trades that I place on this particular strategy. So lesson number 2, you can see there, if you want to make 70,000 plus in 1 week, you have to, as a trader, get happy or be happy with consistently making, I've used the example of 70 quid. So the point I'm trying to make here is it's all about the percentage return and the percentage risk on the trade. So some of the students that I work with very closely, those guys were in the same trades as me. Now, I don't know the size of their accounts. They may have made more than me. They may have made less than me. Obviously, the newer guys will have been making less because I would recommend they started with a much smaller account. But this is key. You have to be happy with the process of placing the trade and the R value, the return, the reward you get for the risk. And if that means, based on the size of your account, that's only 70 quid, well, you have to be happy with that, because too many traders are trying to make too much money with too smaller amount of capital. So the key there is to be consistent. Think, look, that 70 quid that you made, or that £700, or that 70,000, whatever the amount is, that equates to a certain reward value relative to risk. And that's the key. If you keep doing that and you do it for long enough, consistently enough, over months and years, then the same trade or the same equivalent R value trade further down the line is going to equate to a bigger sum of money. And I certainly wasn't making 70,000 in 1 week when I was having good weeks if you go back 10 or 15 years. So it's all about compounding and building that amount up. And it's not the amount, it's the R value. All right, number 3. In trading, logic and emotions are not the same thing. This is a really fascinating one. As somebody who's been coaching traders for a long period of time, what's really interesting is very often when I speak to very new traders, what they think will be the situation they find themselves in is often not. So what I will see with new traders, very often they will say, well, hang on a minute, what's the difference between making £700 on a trade and making £7,000 on a trade? It's just another zero. And if it's the same risk to reward relative to the size of your account, then it's essentially going to be the same thing. But what I say is the reality or the logic of that is very true. And ironically, it's often the new traders that throw that logic back at me. But the reality is, as a trader, you have to build up a strength and an immunity to trading with bigger sums of money. So throughout those trades, I was telling myself, and conditioning myself, like I do on every trade, that regardless of the size of the cash that is involved, it's about the R value. But there were still periods during that trade, especially when the trade was fluctuating, because my two entries that were in April and May, they didn't simply just roll over and the shorts just go down and win. There was a period where the trades were going against me. In fact, there were multiple periods. So I've got the fluctuation in the result. I've got to stick to my rules, but I've also got to remember that there will be times as I'm getting closer to target, especially with a large R value, that percentage return equates to a bigger sum of money, and I've got to maintain my discipline. So it's one thing saying, oh, well, it's just another zero on the end. It's another thing as a trader being able to maintain that discipline as your account grows and you trade with bigger sums of money. And that's why sometimes traders can trade with a couple of £1,000, see a consistent result over a 3-month period, and then they whack a huge amount of money into their account and then wonder why they can't stick to their rules, even though they're risking the same 1%, the same R value on each trade. That 1% is now 1% of 50,000 instead of 1% of 5,000. And the larger sums of money that are in play actually affect their emotions. So understand that logic and emotion are different. And your goal as a trader is to get more logical about the emotional states you're in and learn to manage them and build up a resilience so any emotions you have are kept to a very, very low level. So this for me is a key one. So number 4, stick to your plan on the trade, but as it says there, also over the long term. So there's one thing in the moment, sticking to the trade rules. So getting in at the right point, allocating the right amount of risk, sticking to your target. But that's very different than sticking to a strategy over a period of a year, 2 years, 3 years, 5 years. Because it's easy to stick to the rules of a trade if you are on a nice winning run, you've got regular trades coming in, and the trading strategy is performing well for you. But if you go through a 2 or 3 month drawdown period, which is essentially what I went through prior to these trades, the skill then is not necessarily sticking to the rules of the trade in that moment, but it's sticking to the trade plan that you have in place and giving that strategy enough time to go through its winning periods, but also its inevitable losing periods. All right, number 5. The lesson here, well, this is from my own personal experience, is you can sit there prior to a trade closing out and waste time thinking about how great it's going to feel when you get to a certain point and you make a certain amount of money. And as somebody who coaches traders, as long as you maintain a balance and you stick to your rules on that trade, there's nothing wrong with celebrating when you do have a big win. But what's interesting is what actually made me happy about the trade was the percentage return that I got for myself and what that took my overall account percentage return to. And also the percentage return that put on my fund and the overall percentage return that has now reached. And those two things made me more happy than the cash. Yes, I'm very happy to have that big sum of money come in, but actually for me, those are the two things. And that tells me as a trader that I've conditioned myself to put value on the process that I'm going through, but in terms of the result, more about the return than the actual money. All right, next one. Trades can often be like buses. They come at once. So the old saying is you wait for a bus, and then 3 come at once. Well, trading can be like that both in terms of the number of trades that you get, because there's a random element to it, but also on top of that, it's important to note that the results can be like that. You can have a period like I had where I was going through a drawdown. You can have a quiet period where you're having more losers than winners, but your winners are just keeping you around the break-even mark. And then it can feel like nothing's happening, and then suddenly 2, 3, or 4 trades can come along, and that can be where you hit some big profitable winners, and that's what pushes your account and your percentage return up for that period of time. So it's important to understand that that's a big lesson, that results or number of trades can feel a little bit like buses. Nothing can happen for a while, and then suddenly a big chunk of your result can come in a short period of time. So the last lesson, you have to stay the course regardless of what others say. Now, I saw a recent video on TikTok where a guy was explaining that you shouldn't talk to anyone about the fact that you trade. You shouldn't tell anyone about your trades because then you run the risk of taking on board other people's opinion. But even if it's not about talking to other people, you have to stay the course with your trade. You have to have a plan for every trade that you're going to place, and you have to stick to that. And if you're in a swing trade or a position trade and you're in that trade for a long period of time, be it a week, 2 weeks, 3 weeks, sometimes even months, the risk is that you are probably going to get impacted, or you're going to at least have come into your sphere, your information sphere as I call it. You're going to have opposing opinions in line with what you want to do. So the amount of articles that I saw or popped up on a news feed, or somebody mentioned to me about oil prices going up, and oil prices notoriously are higher in May and higher in December. I'm in these two trades from April and went into the second short trade in May. But I had an overall plan and an overall belief that oil was going to get down to its prior yearly lows, which, as you can see on the chart, is exactly what it did. The two trades set up systematically. So I've got to have the conviction to stay with those trades regardless of what else I'm hearing out there. So they're the 7 lessons. I hope you find them useful. Don't forget, if you've got any questions, you can email us at support@tradersupportclub.com. Don't forget to subscribe to the channel. Also, head to our website, tradersupportclub.com, where you can sign up for free material and be the first to hear about any live events, both free workshops and live trainings that I have got running. As I said, hope you found that useful. Trade safe, and I'll catch up with you again very soon.